going to kind of paraphrase the Blazing Saddles. What in the wild world of sports is happening with the markets? We're experiencing new highs in the S&P from its previous late February peak. What is driving this?
It's actually crazy. You and I combined have probably been doing this for 60 years, and I'm not sure I've ever seen a comeback, a rally like what we have seen. And I think what's happening is the tariff fears are not as bad as when the news first came out a month or 2 months ago. Economic fears have diminished quite a bit. That milder stance on trade, if you will, compared to what the rhetoric was 4 weeks, 6 weeks ago, has really calmed the markets. And what we're seeing is this recovery has expanded to include stocks that are across many sectors. It's not just Mag 7 here. So it is definitely broadening out.
Yeah, no, that actually leads me right into my next question. I was going to ask you what role of, the various sectors played in this movement. Was it there are specific sectors, forget the Mag 7 even, but are there specific sectors that are having outsized influence, or really are just all ships rising right now?
It really is all ships are rising, but what is lagging are the small caps, the Russell here, with inflation risks lingering somewhat. I know people are saying that if and when the tariffs actually go into effect, that we may see some rising inflation, but economic growth forecasts are not as bad as they were. The Fed's cautious stance has probably eased up a little bit. And what has this all led to? It's led to this broadening, especially in like defensive sectors, utilities, healthcare, consumer staples. We're also seeing some growth sectors besides tech. You look at the financials, and boy, the financials are just gangbusters.
Right.
And that's typically a really good barometer of the overall market, if you will. And we'll start getting some of those big bank earnings in about a week or two.
And we had ADP come out today, and we have several economic indicators coming out tomorrow, like the initial jobless claims, like the employment report, and the U.S. trade deficit. Do you think the market's pricing them in appropriately, or do you think there could be some surprises, or is it just too hard to tell
It
until they?
it certainly seems like there's a lot of complacency right now that the market is pricing in probably a number on the lower end, not necessarily as bad as the ADP number was. I think the expectation is for 120,000 new jobs. My guess is the way the market is acting, it's probably going to be somewhat close, maybe a little shy of that. But it will be an important number because it's just more fuel for the Fed to consternate over what they're going to do, which at this point most likely is July no hike, no decrease in rates. But at the September meeting, that's over 90% probability now that we will start seeing rates going down.
Got it. Got it. And we're rolling into a short week this week with a half trading day tomorrow, and a day off for the 4th on Friday. But in the next couple of weeks, are there other events occurring that the market's starting to look at and trading around?
Yeah, absolutely. Next week, something that may not be on everyone's radar yet, but next Wednesday, we have a 10-year note auction. That is going to be huge. How is that going to affect the marketplace? Are yields going back up? Is there going to be demand for the 10 years? So that's something to really watch on Wednesday. Obviously, on July 9th, that's the big proposed tariff day. So is that going to be a kind of buy the rumor, sell the news event? Is it going to be extended, which would be what my guess is? That may be pushed down the road a little bit. We get Fed minutes next week. And then also, here we are, we're right back at earnings season again. Earnings season starts up next week. And then the following week is when the big banks, Goldman, JP, Citi, and they'll all start reporting as well.
Got it. Yeah, no, lots of good stuff on the horizon. And Scott, thank you so much for swinging by the IBKR podcast studio via the floor of the CBOE. Always great seeing you. And until next time, enjoy the holiday.
You too. Thanks a lot, Jeff.
Great. Thanks, Scott.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.